If you are a trader or an investor, then most people around you think you are losing money by now because the market has been tanking for the past 6 months and they are holding indexes or stocks portfolio. And then they think that you are in the same boat. Of course, as an algo trader or an investor using trading systems, then you should not be in the same boat. Actually, I was supposed to post a different video today, but a question came in the Discord channel that asked me, how is your portfolio doing in this crashing market? So I thought this is a good opportunity to illustrate how you can have trading systems that make money in different market regimes. So the strategy we will discuss today is the RSI2. Now I mentioned the RSI2 on this channel 100 times. It is really an excellent strategy. I have, I don't know, 25 variations of this strategy on different time frames or with different filters, trading different market regimes, and so on and so forth. It's really a robust strategy, and it is the best strategy to illustrate what you can do with simple filters. So first, let's see what the market has been doing for the past 6 months. And it's not a good picture. So this is the S&P 500 index, and as you can see, it peaked in January 4 here. Actually, this is the start of the year, and we've been in a drawdown ever since, around 21%, and we are just testing this drawdown again now. So of course the trend is down, with this pullback is the major one. We have one here minor and another one minor here, but otherwise it's a downtrending market. So if I pull the RSI2 strategy, it's very simple strategy. As you know, it's RSI2. When it's below 25, we go long. When it's above 75, we exit. There is no stop loss, no profit target. I use the data since 2019 because my focus actually is 2022. We know we had a monster year in 2021, and actually we can see this. As you can see here, 2021 we made $55,000, while in 2022 we lost $9,000. And you can see that 2021 is an outlier year. And actually, this is a good thing to remember, that whenever you have an outlier year or an outlier month or whatever the period it is, then usually the following period is a bad period. That is just statistics, and you should keep this in mind. So if the strategy failed in 2022, this is actually to be expected because 2021 was an outlier year. This is not a normal year for mean reversion strategies. Of course, everybody piled on mean reversion strategies by December 2021. And this is the normal herd mentality where everybody jumped on the best hedge fund, best mutual fund, best index, and in this case, best style. So the first filter I will show you today is a seasonal filter. So this is SeasonX. It's a software built to find seasonal patterns in indexes, commodities, stocks. It's about actually more than 29,000 instruments globally. So of course you can do seasonalities over multiple of days, and that's the main power of this software. And you can see, for example, here, this pattern between June 26 to July 23, which is 15 trading days. And if you trade this each year, you can see it has 93 winning percent. Of course, this is the past 15 years, which 12 of it were bull market. But even if we go 25 years, other than 2002, which is the bubble burst, 2008, another bubble burst, it was actually a really good pattern. But today we're not using it for that. I want to show you today that you can use the daily pattern as a filter. So this is over the past 25 years. You can see Monday didn't do anything. And if we go 15 years, Monday actually is a down day. And 10 years, again, Monday is doing nothing. And past 5 years, Monday is slightly up. Remember, past last 10 years, we are in a bull market, and an extreme bull market, and still yet Monday didn't do anything. So Monday actually is a down day. So if I add this condition, which is don't trade on Monday. So bar day of the week is not Monday. So if you check this condition on Monday, then of course it will not work, because by the time the close happen on Monday, you're already done. So you need to check it on Friday. So we need to check if the day is Friday, then we will not issue a signal on the next trading day, which is in this case Monday. So here is the strategy now since the year 2001. So we can see in total we are making 148, and our open drawdown is 48,000. So if I add the don't trade on Monday, which is of course don't trade on Friday, so the signal is not issued on Monday. So we have now currently 403 trades making 148,000. And we can see that we reduce the trades by almost 20 trades and we make more money. Also, we reduce our drawdown. So this simple don't trade on Monday filter actually works for the past 22 years. So you can see seasonality plays a huge effect, and it can be used to generate signals, or in this case, we are using it as a filter to enhance our strategy. Now, this don't trade on Monday will not play a role in, let's say, a year like 2022, because you usually don't have enough trades in a year for this filter to have an effect. As you can see, it's filtered 20 trades over the past 22 years. Okay, so back to the original strategy only for the last 3 years. So since 2019. So we have 59 trades making 64,000, and we have an open drawdown of $46,000. We have 8 trades in 2022, and we are losing about $9,000. Now, if I introduce a simple directional filter, so this is that Oasis direction filter. This is part of the market regime filters that I have. It's a proprietary indicator, but it's just a directional filter. And I'll show you other filters that you can use other than this. But just to show you, this is now filtering number state 4 means it's in bull market. So if I run the strategy now, you can see I made almost the same amount of money. But look at this, it's almost half the number of trades. And look at the drawdown. So the drawdowns went all the way to 18,000. Original strategy was making 64,000 with 48,000 drawdown. This one is 18,000 drawdown. So it's we decimated the drawdown by half, and we're still almost making the same amount of money. And now 2020 is a profitable year. So we have one trade in 2020 making $2,000. Hello everyone, enjoying the content so far? I hope you do. If you are, make sure to subscribe, hit the notification bell so you don't miss any of the great content that I post on this channel. Now, the reason I like my StrategyQuant directional filter is you cannot optimize it. It's fixed. But of course, we can use other ideas to get direction. So going back to the original strategy, and now I just added another directional filter. So when the simple moving average of 5 bars greater than the simple moving average of 10 bars, then we can take the trade. Again, this is considered a directional filter, and we reduce again the trades, and we actually now make a lot more money. So now we make $96,000 instead of 64. We also reduce our drawdown by half. And now the 2020 year had 3 trades and making 4,700. So this is the original strategy again. And now I added the volatility filter. This is StrategyQuant volatility. Again, it's a proprietary filter. It's fixed, so you cannot optimize it. And I just picked if the volatility is rising. So now we don't care about direction, if it's up or if it's down. We only care about when volatility is expanding, we will allow the RSI2 trade to happen. And if we run again the strategy, and again we can see we decimated the original drawdown. Now we have $22,000 and we're making almost the same amount of the original money. Winning percentage is 81. And now 2022 is also a profitable year over 5 trades. And here is now another volatility filter. This you can find, of course, everywhere. I'm comparing the current bar range with the average true range. So this is the original strategy. And let's run the test. And now we can see I have 8 trades in 2022 and making $4,700. And again, we reduce the drawdown and we almost make the same amount of money. So as you can see, you can enhance or adapt a strategy to a certain market regime by introducing filters. Direction and volatility usually work best with most strategies. Also, patterns do a great job with strategies. And of course, you can combine all of them or some of them. You can combine direction, volatility, and pattern, or any two from these three. The point is you can adapt a strategy to a certain market regime, and even though that strategy will reduce the number of trades, but you can combine it with a different filter that trades in a different market regime, and then you combine those two strategies in a portfolio. So I hope that this video shed some light on how to develop strategies for certain market regimes and how you can make money in different market regimes. As always, if you have any questions, any comments, please do so below the video and I'll be more than happy to answer you. I do read and comment on every single question sent to the channel. And of course, if you want to take this further, be a part of my inner circle, have a deeper questions, looking for deeper answers, then you are more than welcome to join the Discord channel where we take this further, and I host live question and answer sessions with more than 450 questions already recorded and cataloged in a database ready for you when you are searching for an answer. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.